As requested, here is my ETF breakdown. I'm gonna break them all down as best as I can. If you want to know more information about them, just go to their website as well. You can learn more about them as well. First things first, we got paid. We got paid $2 and where am I going? Um, yeah, we got paid $2 and like 75 cents, I think. Now I miscalculated. My Cornerstone payments didn't pay me because I didn't buy them before the ex dividend date. So you got to buy them before the ex dividend date. I bought them on the 21st of January. The ex dividend date was January 15th. So my 1 month payments, my monthly payers didn't pay. They'll pay next month. But hey, I got paid like 270. I think it was like 270 something, 274. That's cool. Hey, it's paying, and I'm trying to figure it out. Where the fuck do I go? Here, that's my income. We'll do current week. Yeah, it was 274 is what I got paid from all these. Again, my cornerstones didn't pay. They'll pay next month because I bought them after the ex dividend date. But it's all good. Hey, money's money. I'm creating money out of thin air. You know what I mean? So the more money in this account, the higher this will be. All right, so let's get into the nitty gritty. It's going to be like a kind of a brief, right, introduction to my ETFs. You guys can do your own research and dig down these and go to the websites and read about them some more. Always trust but verify. All right, here we go. I have 11 funds that I invest in, right? Eight of them pay weekly, every single Friday. Two pay monthly. One pays quarterly. Where's it at? One pays quarterly. So I tie all of my investments to the indexes. What are the indexes? Up here, the Dow Jones, the Nasdaq, S&P, and the Russell, which you don't see, right? All these funds track these things. I do not invest in single stocks. Like I said in my video before, I don't like single stock headline risk, right? If I invest in Tesla and Elon says some dumb shit, Tesla stocks fall. Tesla stocks fall. But if I invest in Nasdaq where Tesla trades in, it won't fall as hard. For example, again, one day DeepSeek, a Chinese company, came out and said that they made a AI chip or something like that for a fraction of what Nvidia is making their AI chips with. And that made Nvidia crash 17%, the largest crash it's ever did in its entire existence. But that day, the NASDAQ was only down 3%. Nvidia was down 17%. Again, headline risk is everything. If you tie your funds to the indexes, you can't go wrong. All right, here we go. We got Cornerstone. There's two of them, CLM, CRF, right? These funds have been out since 1980, I think, right? They're a closed-end fund. So I'm still kind of learning about closed-end funds. If I'm not mistaken, like a closed-end fund, like they invest in back in a basket of stocks, right? But what they do is the investor, me, when I put my money into these funds, they lock up your funds for a certain amount of time. Like you're not allowed to move your money in and out. That's like the main gist of them, main gist of closed-end funds. Like your funds are locked in for a certain like they could be like 4 or 5 years. Because remember, they're taking your money and they're investing into these companies. They're trying to make these companies grow. So if you keep taking your money in and out of these funds willy nilly, well, how are you investing? So I think open end funds are kind of like closed end funds, except you're able to trade and sell out whenever you want to. So that's what these are. 1987, been had for a long time. They invest in like the S&P, the Nasdaq, all that stuff, right? So you can see their main shares. They own like 200 stocks or some shit like that, right? Whatever. These two are my favorite funds because they do three things extremely well. So when you're investing in dividend income, you don't want per se the share price to take off running, right? You don't want it to just go up to $30 and drop back down. I like when my funds stay flat. When I'm in my flat, they trade like this. I want them to trade sideways. Cornerstone funds trade from like $6 to about $10 and it'll go back and forward, right? That's cool. I like that. I don't like a lot of volatility. I like slow growers, but staying in the box. If it stays in the box, I'm cool, right? I don't want a lot of volatility. Now we're gonna talk about something called NAV erosion, which is kind of a myth with these funds. NAV erosion. If you look at the chart, right? Um, Look at this. If you look at the chart on E-Trade or Robinhood or any other financial site, price is going straight down. It went from $100, $200, whatever, down to $8, right? That's fine. But I think around 2008 or something like that, around like here, they finally got the true price of the stock, right? You got the '08 crash, all that stuff, right? So, doom. It's true net asset value is like $6 to $7, right? Now, as you can see, Cornerstone just going flat. It's not really doing things. It's not doing anything at all, right? That's cool. So when you go on their website, right, all stocks have the net asset value. It's like the true value of the stock at its current price. So the NAV for CLM is $7. This is the true price that CLM is. The current price is $8.92, right? So Cornerstone is trading at a premium. This is where Cornerstone goes crazy, right? So it has a special feature called dripping at the NAV. So when you drip dividend reinvestment plan, when you get paid a dividend, you reinvest the money back into the company. That's called a drip, or the stock it's called a drip. Cornerstone drips at the NAV. So, right, every month when you get paid from Cornerstone, let's say you get paid 5 grand from 5,000 from Cornerstone this month, right? And you got drip on, it's going to drip the 5,000 back at 7-Eleven. So normally stocks when you do drip, it buys it at the current market price. No, no, no. Cornerstone drips at the NAV. It's free fucking money every single month. This is huge. This is why Cornerstone is a 4-star, sometimes 5-star fund. It'll bounce in between. I'm giving y'all free game. 4-star fund on Morningstar. Morningstar is a trusted site. Um, they do a lot of stock market analysis. A lot of people like trust and rely on Morningstar. 4-star fund. One, two, three, four. Right? Come on, bro. Because of this right here, it drips at the NAV. This is free money. And its cousin, CRF, does the same thing. Go to net asset value, boom. It's trading at a 31% premium. Free money every single month, bro. So if I'd got my Cornerstone payment for this month, cool. My money would have rebought these shares at 677, not at 887. So now you're getting the growth from $6 to whatever it goes to. So if this goes to $9, well, you're getting that premium from 677. You're buying the actual lows. Huge free money. Again, this is why it's a 4-star, 5-star fund. Cornerstone is huge. It's tied to the index, right? What stock is tied to the index and gives you 30% gains every single month? And it's not even the best part, right? Its dividends is, damn, I'm getting all hype over here. Its dividends is set for the year, right? It don't matter what happens in the market, right? Its dividends is set for the year. So every single year it'll do a thing. I think it's like November or August or October where it sets its dividend for the entire year. Yeah, is this it right here? Hold on a second. Yeah, so it has a 21% dividend, right? Damn, where is that? Where is that shit at? Press release. Yeah, here we go. Yeah. Um, I'm trying to find it. So will remain unchanged from the current year at 21% of the net asset value for each fund. Its dividends are set at 21% for the entire year. It don't matter if the market crashes or has a huge run, you're going to get paid the same for the entire year. So I'm getting paid 12 cents a share at CLM, 16 cents a share CRF. Its dividend is set. My other funds, other dividends can cut dividends depending on what's happening in the market. So the dividend is set 21%, and it drips its dividends down at the net asset value every single month for free gains. This is why it's a 4-star fund. So this is where my growth comes from. Yes, it trades in a box, but this is where my growth comes from, right? Now, this is why I say don't look at E-Trade charts. I'm gonna show you my other funds as well. Don't look at E-Trade charts. They just go straight down. Because E-Trade does not factor in dividends being reinvested, right? It's just strictly shares and what it's doing, right? So you got to look at the true chart, which is on Morningstar. So type in whatever fund you want to type in. So this is Cornerstone, 4-star funds. So another 5-star fund. I go to performance. Go to performance, right? The red line is the index, so it's like the Nas and S&P, and the blue line is Cornerstone. It's trading right near it. It's matching it. Sometimes it's beating it. Look at this. It went to like 30 something thousand, bro. Like it's sometimes it will beat the index. This is why it's a 4-star, 5-star fund. Dividends is set for the year, and premium pay, you get the day's gains and the monthly gains because you're buying your shares at the NAV, bro. Come on, man. This is the secret. This is why all my investments, like my portfolio, my anchor is you put most of your money in these funds, and it's like a big portion of your portfolio. So most of my money's going to be parked in these two funds, CRF, CLM, CRF. That's why. And this is where I get some of my gains. I don't get a lot of market gains, but my account's going to grow because of my dividends being paid and a little bit of market gains. I have another fund that's strictly for just portfolio growth. But again, I'm a dividend investor. I don't really care about like, huge portfolio growth from capital gains. I'm a dividend investor. Oh yeah, and two, right? Cornerstone, CRF, all these funds, right? They're just returning my capital to me. ROC, return of capital, that's tax free. Come on, man. I'm putting y'all on game, bro. I'm giving y'all free game. So yeah, I'm not getting capital gains tax. I'm getting return on capital, which is tax free. So cool. That's Cornerstone. Again, don't look at a chart on E-Trade. It's going to show it going straight down. Also, too, closed-end funds are kind of tricky to play. So this is my first time playing with them. So they have a thing called rights offerings. Like they'll announce it way ahead of schedule. You need to sell all but 3 shares of these funds, and then you buy back the shares once the rights offering happens. What they do is they create more shares of the stock, so that dilutes your shares if you still hold them when the rights offerings happen. So once Cornerstone announces it, the rights offering, you go in, sell some shares, wait till it's done, and you buy back. You just buy your position back again, and wait till the next rights offering. I haven't done one before, so I don't, I can't talk too much, but I just been studying and learning from my mentor on what to do. So I'm gonna show you guys how to play our rights offering whenever it happens. Again, they will announce it way ahead of schedule. They'll be like, "Hey, rights offering happening right here. We'll end this date. Cool. Sell some of my shares. Wait till it's done. Buy back." All right, here we go. Now we're getting into the Defiance funds. All right, we got IWMY, QQQY, and WDTE, right? Defiance. Oh boy, this one gets a lot of hate, but I'm about to prove you guys wrong. So Defiance. All my other funds are options income ETFs. What does that mean? Okay. Um, Selling options is the easiest way to create passive income, right? The only thing is you have to own 100 shares of what you're trying to sell. So um, these guys are selling um, are selling options on the Russell 2000 index, right? So it's tied to the index. Now, when it comes to options ETFs, they don't have a lot of upside potential, right? And that's fine. That's cool. Remember, I want my stock to trade sideways. That's fine. So you won't get a lot of capital gains growth. You will get some days gains, whatever, but you don't get a lot of capital gains growth because these guys are just dumping out money. 37% dividend yield paid weekly. So they're just dumping out money to you. So you don't get a lot of growth. That's fine. My portfolio is all utility. So I have growth stocks, I have monthly stocks, weekly stocks. It's all together, right? Cool. So what they do is they sell options on the underlying asset that they're investing in, which is the Russell. IWMY is the Russell 2000. So as soon as you hit sell, you get a premium. That premium that you make from selling your options, that's what they pay out to our shareholders. Now they do 0 day to expiration, meaning that um, so normal options trading ETFs will do a monthly strike price or like a monthly options call or put whatever, meaning that they're selling options a month out. But the 0 DTE meaning they're doing daily option trades every single day at the end of the stock market close. They close this position. Then they'll do it again the next day, and the next day, and the next day, and the next day. So I like that because they're able to adjust the strategy the very next day. So like if a company is doing it for a whole month out, well, they're kind of stuck in their position. But if the volatility changes throughout the week, they can adjust accordingly with the 0 DTE. That's why I like it. Now, you can look at IWMY and be like, bro, what the hell? IWMY for the past year just been going straight down, right? Ooh, 50. This is NAV erosion. This is NAV erosion. This is going straight down. Remember, I told you can't look at a chart on E-Trade or Robinhood or M1 or Yahoo Finance. You got to look at the real chart because these charts don't factor in um, dividends being reinvested. So let's do that. Let's look at the real chart, IWMY. Go to performance. It's actually beating the Russell 2000. Numbers don't lie. This blue line, IWMY. This red line is the Russell 2000. Here's the numbers right here. It's beating the Russell. That's why I say you gotta look at the true chart. The true chart is on Morningstar because it factors in dividends being reinvested. Because I will reinvest some of my dividends into my account the way it'll grow too, and I'll get paid more each month and each week. So that's that. That pay a 37% dividend. This pays weekly. These fluctuate, right? Boom. Oh, and also when I said that my stocks are utility, right? So um, some of my other options funds, right? They sell calls, right? So they're selling for buys. Defiance does put options. So when the market goes down, they actually increase their dividends. So when the market goes down, right? Defiance funds go down less than the index, if that makes sense. So if it's like a really bad market crash, right? My other funds might get cooked, but Defiance will get cooked less, right? And then I was told that they actually increase their dividends when the market goes down because remember they're selling puts, they're selling sales. So I don't know if that's true or not. My mentor said it, so I gotta trust but verify. I gotta do my own research on that. But yeah, so when it's a bad market, I'm protected. So that's what that is. It sells puts on the Russell 2000. QDTE, no, QQQY is the Nasdaq. It sells puts on the Nasdaq. Again, don't look at this chart, right? 37% dividend yield. Don't look at this chart. Look at the real chart. Oh shit. QQQY. Okay, it's lagging a little bit. So, but it's close. It's decent. The Nas got cooked this week, but yeah, the index right here, Nas right here, is right here. That's cool. But see, the Nasdaq not gonna pay you a dividend every single week. You feel me? So, boom. But it's not going down though. It's not going down. Your money's not going down. You might be down market wise, but it's all about total return, right? It's all about total gain. Total gain is the name of the game. Total gain. Stop worrying about your portfolio. Like, oh, I'm down $1,000 in my position. Cool. If you're down $1,000 in your position on QQQY, but it pays you $3,000 a month, you're up. You're up 2 bands. It's all about total gain, total return. And when my portfolio is at a high enough level, I'm gonna show you guys the difference. Total return. So this sells puts daily options on the Nasdaq. Then I have the same thing with WDTE. It sells puts on S&P 500. Again, start the charts looks like shit on E-Trade. Let's look at the real chart, WDTE. Now these funds just came out like a year or two ago, so they're still new. So I'm still trying to see how they perform. Look at this, beating the index. It's beating the S&P 500. It's right here. S&P, WTE. It's beating the index. There's no NAV erosion when you factor in dividend reinvestment. It's beating the index. This is the true chart. This is the true chart. Numbers don't lie. Don't look at this. Doesn't factor in dividends. I'm giving y'all free game. Cool. Those are Defiance funds. IWMY. So the Russell, NASDAQ, S&P. All right. Let's go to the new ones. Robinhood. Just Robinhood. Jesus Christ. Roundhill. Roundhill's making waves, bro. So they do the same thing, except they sell calls on their option on their underlying assets. So this is the Nasdaq. They're selling calls. They're selling like buys, right? Cool thing about these guys is they do have a little bit of growth, right? Roundhill funds have a little bit of growth because what they do is they'll sell zero DTE calls, right? So they're done trading at the end of the day, but they have a long position on the Nasdaq overnight, so you can get the overnight and morning and early morning gains. If there's market movement overnight, see how I went up 40% after extended hours because they have a long position, right? So they'll close this at the end of the day. They'll sell their cover call, collect the premium or whatever, and then they have a long position just running. So if the Nasdaq goes up over extended hours, I get the capital gains off that. So, and it doesn't move that much. You get a little bit. That's 0.40, whatever, 16 cent, whatever. It doesn't do too much movement, but hey, you can get a little bit of. It helps with the quote unquote NAV erosion, and you get a little bit of growth from these funds. But these funds are only a year old, and they already made $4 billion. So that's why I think these funds are here to stay. Like Defiance is losing a little bit of investors, but I'm still playing the long game. But yeah, 1 year fund already made $4 billion just from 3 funds. It's crazy. So yeah, sells calls, so sells buys on the Nasdaq. Total return. Yeah, see, hasn't even been a year yet. Look at the 1 year chart, it's kind of going up and down. Let's look at the real chart, right? Trust but verify. QDTE. This is what we do. QDTE. Go to performance. Scroll down. Beating the index. QDTE is right here. The blue line, you can't really see it, but you can see the ledger on the side. QDTE is beating the index. So what the SPX? So yeah, they can be like, oh, just invest in SPX and let it ride. Yeah, you're right. But cool. But guess what? It's not paying you a weekly dividend. You can't live off that shit. You got to sell SPX to live off of it. I don't have to sell any of my shares. That's why I like dividend investing. And I'm beating the index. Beating the index, and I don't have to sell my shares. Come on, man. I'm giving y'all a free game. No, this is not for financial advice. Do your own research. This is just what I'm doing. Then you got RDTE. This is Round Hill's cover call on the Russell 2000. Down a little bit because the Russell's getting beat up. Um, should go up some more once my dividends kick in. Yeah, it's trading kind of sideways. What's the real chart? RDTE. I go to the real chart. Not fucking rate, you stupid fuck. RDTE. RDTE. Well, I gotta do some work in a second, bro. Make this video short. Oh, it's already on it. RDTE? Yeah. Scroll down. Beating the Russell 2000 index. So I'm saying I'm getting weekly payments, a little bit of growth, and I'm beating the index. Come on, man. Win-win. All right. And then we have XDTE, which is the S&P 500 0-day cover call. Down a little bit in my position, whatever, that's fine. Ooh, this was pretty stable. It's trading sideways. I love sideways moving. I don't want a lot of volatility. I love when it trades sideways. Love, 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 love. And it pays weekly. Let's look at the true value of it. WDT, XDTE is the S&P 500. Let's see what it's doing. The true chart. Scroll down, performance. Beating the S&P 500, bro. Come on, beating it, and I'm getting paid weekly. Come on, man. Come on. Those are Round Hill funds. Then I have the GOAT, the OG, SCHD. Now this one is my capital gains. Just put money in there, let it grow. So this is me balancing my portfolio. I don't have that much growth, but SCHD is one of the best funds ever come out. Right? It's a slow grower. As you can see, it goes nothing but upper left to right. It goes straight up. Pays a quarterly dividend. I'm not. Well, kind of am because it's a dividend equity ETF. It's very strict and it tracks the Dow 100. Um, and it's very, very, very strict. Like if the companies within its holdings don't cut it, they get nixed. So it's actively managed, and they have very strict standards. So you can see it's just been going up. So this is my grower that pays a good dividend every quarter. And let's just look at it. SCHD. This is OG. Everybody knows about SCHD. SCHD is OG. 4-star fund. Sometimes it's a 5-star fund. I mean, look at it, bro. It's beating the index. It's beating the Dow. Blue line, killing it, bro. So this is my slow grower. This will help put my quote unquote capital gains. Not much to say about that one. That's OG. All right, the last one, Yield Max. All right, so these aren't necessarily super tied to the index, but it kind of is. So we have YMAG. YMAG is the Magnificent Seven. You heard me say it before, right? I think they do weekly cover calls. I think it's weekly. They pay weekly, but I think they do weeklies on whatever they're investing in. So they have different funds that they invest in or different classes. So this is the Mag 7. The Magnificent Seven are the seven big stocks that actually move the market. So the Mag Sevens are Apple, Amazon, Facebook, Google, Microsoft, Nvidia, Tesla. The Mag Sevens, pretty much all tech stocks, honestly. So sort of kind of tied to Nasdaq, but a little bit not as diverse. Remember, the Nasdaq has 100 stocks in it. This is only seven, but this is the big seven, bro. So I'm going to invest in it. It pays weekly, and yeah, down a little bit in my position. That's fine. I'm going to keep on. Yep, to the Mag Sevens are all right here. They sell calls on Apple, Facebook, Nvidia, Amazon, Microsoft, Google, and Tesla. Mag Sevens. up 35% since inception. Pays a strong dividend weekly. Let's go to YMAG. It's not really tied to the index, so I don't know how the performance is, but we'll see. It's beating NASDAQ by a lot. Tie your stuff to the index. Don't just invest in single stocks. Tie it to the index. I'm gonna keep repeating myself. You tie it to the index, you can't go wrong. And then I have Y Max, which is like, is it 50? Is it 50 stocks or is it? I don't know. Let me just go to fucking Yo Max. I don't even know. I want to say it's 30 just big chip, large cap stocks, but I'm not sure. But these two are the main two that everybody invests in, YMAX and YMAG. Yeah, it's fund of funds. Da-da-da-da-da. Let's see. Pays weekly. Da-da-da-da. What they invest in. You can look up their holdings. So no, download all the holdings. So it invests in. It's like 30 stocks. So Airbnb, AI, AMD, Amazon, Apple, Baba, Coinbase, Disney, Facebook. This is a bond. Gold miners, Google, JP Morgan, Mara, Microsoft, Netflix, Nvidia. So, big names. Planeteer, PayPal, SMCI, Snow, Square, Tesla, TSM, Exxon, Bitcoin. Yeah, so it's like 30 random big names or big companies combined. So not really the index, but hey, it's tied to something. And these are the big ones that everybody invests in. All the new investors are not new investors, but all the big money's investing in. Go to YMAX. Um, yep, it's on par with the index. Again, it's not really tied to anything because what you saw is like got Bitcoin in there, it has bonds, it has treasury bonds in there, it has a bunch of shit in there. But it's a basket of stocks, has the main seven in there a little bit, and it's beating the index or on par with it, beating it barely. So, boom, that's that. Um, yeah, man. So these are my funds, brodies and bro. It's my portfolio. Yeah. Again, I'll be giving you guys daily updates on it, on what they're doing. Again, don't expect a lot of growth, capital gains growth, because as you see, they don't grow that much because they sell options. My growers are right here. My two favorite cornerstones. Remember, these ones drip at the NAV and have the 21% dividend set. Then all the rest of them are, and this one is my long term, not just the S&P 500 grower or Dow grower. Just put your money in and let it grow. That's what this one is. And the rest are weekly payers. So my goal is to retire off this portfolio without having to sell shares. Again, I learned from my mentor. It's not just me making this shit up. Again, I've been into the stock market before, dividend investing, but not on these funds. I learned everything from him. If you want to follow this channel, learn more. He used to actually, I think he used to work for Morningstar. So he's like, yeah, have a degree in finance, 20 years of trading, was featured on Bloomberg. Yeah, bro. Like, it's no BS. He has a Discord, and he writes everybody on it. If you leave a comment, he's gonna like respond to you. So good guy, man. No scammer. Good guy, bro. And he invests in all these funds that I invest in. Look, he makes 500K a year. You can see in 600K it fluctuates, but I mean he was down here at 300K. You know what I mean? 200K, 100K a year, and it just snowballed, bro. Snowball. He buys on margin. I'm not gonna do that. I'm gonna just do it strictly off of like my own funds because margin is kind of tricky to play with. But yeah, this is where I learned all this stuff from, and I'm still learning. So yeah, man, that's a breakdown of my ETFs. Um, yeah, man, that's all I got. Daily updates coming, and I'll keep you guys posted on my dividends. I'll catch y'all.